Where are mortgage interest rates headed in 2025? In this video, I'm going to talk to you guys about different predictions made by industry experts about where mortgage rates are headed this year. Of course, getting an idea where rates may be is extremely important to you if you are in the market of buying a home, maybe in the market of buying one, especially if you are locked into one of those COVID interest rates, or if you are a homeowner who bought a home in the past few years with a higher interest rate and you're waiting for a chance to refinance. But first, I want you to understand where interest rates are right now. Now, currently the average 30-year fixed conventional mortgage rate is sitting at 6.71% nationwide, while government interest rates such as FHA and VA are down to 6.11 and 6.12%. Now, these are the lowest interest rates in nearly 30 days. And as you guys can see, the trend of rates has been coming down since the beginning of the year. In the past 30 days or so, we have been sort of trending in this range between 6.7% and 6.82%. Rates have tested the 6.7% floor a few times already, but has not been able to break it. And looking at it from a technical analysis perspective, if rates broke this floor of 6.7%, we may actually be in a trade for interest rates where they drop drastically. And this is a chart of the 10-year Treasury yield going back to just 5 days, and we're able to see the same trend. Since March 27th, the yield on the 10-year has dropped by about 254 basis points. That is a huge drop. This is a change of about $254 for every $100,000 in bonds. But why is this happening? Well, it's no surprise that the economy is weakening and more data coming out points to a recession or at least a slowdown, and economic forecasts are simply being missed with every report. For example, yesterday's ISM manufacturing was missed by 49.5, forecasted to 49. This points to a slowdown in manufacturing and production. Job openings were missed from 7.63 million forecasted to 7,568,000. And now the Atlanta Fed is expecting GDP to shrink by 3.7% in their latest model. And then, of course, we have the tariffs. Investors are on high alert with how the new tariffs are impacting the economy and businesses. And when investors are scared, they move their money from the stock market into safer assets like the bond market, and this helps interest rates. Now, Trump has announced multiple tariffs on other countries, with the latest one being the 25% tariff on foreign cars, but also reciprocal tariffs on other countries that are responding to ours. And so it goes without saying that the more value the stock market loses, the better interest rates get. Okay, so where are interest rates headed for this year? Here's what some experts are predicting how market conditions will affect the average 30-year fixed mortgage in 2025. According to the National Association of Home Builders, they predict mortgage rates to average 6.65% in 2025. They also believe rates could ease in 2026, decreasing to a yearly average of 6.19%. JP Morgan expects rates to stay high throughout the year, with only a slight decrease to 6.7% by year's end. This is one of the most pessimistic forecasts out there. And some of the more optimistic lower interest rate forecasts are coming from Fannie Mae. Fannie just revised mortgage rates to end 2025 at 6.3% and 6.2%, both being downward revisions from their February projections. Realtor.com, in their 2025 housing forecast, they expect rates to average 6.3% and end the year at 6.2%. And then finally, the National Association of Realtors project the 30-year mortgage rate to be at 6.5% in 2025 and then dropping to 6% in 2026. Now, I know a lot of you guys are probably saying, well, this isn't really low enough. Now, I do want you to understand that these are average conventional rates, so not necessarily an indication of what you may potentially be able to fetch if you were looking for a mortgage. And I want you guys to take a look at this chart right here. It's the 10-year Treasury, and in September of 2024, the yield dropped to a low of 3.794%. Now, this drop, which unfortunately only lasted for about 2 or 3 weeks, created a wave of refinances. We had clients who were able to lock in conventional 30-year fixed mortgages as low as 5.25%, and FHA clients who were fortunate enough to get their rates back in the 4s. Now, what is my own prediction for 2025? I personally believe the 10-year Treasury yield has the potential to dip below 4% at some point this year, and we're very close to it. This should be able to push rates for the average 30-year conventional mortgage between 5.9% to 6.25%, while government interest rates like FHA and VA, I'm thinking they're gonna be somewhere between 5.6 6% to 5.9%. My company, we're helping clients with FHA and VA mortgages refinance their loans into rates as low as 5.6% and even lower in some cases already. Now, I don't want you guys to get greedy, especially those of you who have a higher interest rate. If you can take advantage of a low rate and it meets your savings threshold, look, go ahead and take it, lock it in. I don't want you guys to be playing financial analysts because you simply don't know what's going to happen with interest rates. They can really just jump out of nowhere and thereby wiping out all of the potential savings that you may be able to obtain by doing a refinance. All right, guys, that's basically it about predictions for 2025 as far as interest rates are concerned. Let me know, what do you think in the comment box below? If you believe rates are gonna get better, they're gonna get worse, and kind of what your projection looks like. And hopefully you guys like the video. I will see you again soon. Take care.